Holy cannoli is what my girlfriend would say if she was a trader in the stock market. Looking at the CPI report tomorrow, the expected number is 8.8%. The last reading we got and the markets freaked out and dropped 12% was an 8.6% reading. So this will be important for a lot of different reasons that we will talk about here in this video. And this video is probably one of the most important videos that you want to pay very close attention to. We are also going to talk about a leaked document saying CPI is going to come in over 10%. Take that with a huge grain of salt, but we're going to go over what potentially could happen if CPI is over 8.8% or under 8.8%. There's a bit of a silver lining here, but also this could create a lot of fear, and this could lead to a 3, 4, 5% down move tomorrow, especially if this leaked document is true. So we got a lot to talk about in a very short amount of time. Slap that ass, hit the like button, and subscribe to the channel. Do what you guys gotta do. Get freaky with it. Do what you guys gotta do, baby. Comment down below. Let me know what you guys think about tomorrow. What do you guys think about CPI? Are we gonna have a bullish reaction, a bearish reaction, pretty neutral? Let me know your thoughts on that. As of the last couple of days in general, the volume has been on the low side. Specifically for the day, you're only at about 30 million for volume. We still do have about an hour left of trading, but this is a very low volume day. Typically on the S&P 500 on a high day, you can be almost 200 million for volume. On a low day, I mean 50 million, that's a pretty low day. That's what we seen yesterday, was 58 million. You're at 30 million today. So people are literally waiting around for this CPI report to make their moves, and potentially could be a move to the downside. I mean, what we're looking at right now has not been good, and I've been expressing that to you guys here on this channel over the last couple of days. But look at the dollar, look at UUP. This thing continues to rally, and the higher this goes, the more global currencies are weakening, aka people are looking to buy the dollar for safety, and we are at the highs of what we've seen during the COVID crash. So we are looking at fear that we have not seen since the COVID crash, and even I would argue more fear now that has lasted a lot longer than even what we've seen back during COVID. And depending on what the CPI report does, it's going to change expectations for how the Fed is going to battle inflation. If the markets start to expect the Fed is going to have to raise more and potentially for longer, UUP will continue to rally. This will hurt American businesses on a more fundamental level, but this is the best fear gauge that you can go off of, right? People look at the VIX. People always want to talk about the VIX as a fear gauge. No, it's actually the US dollar. You want to watch the US dollar. If we continue to break out, that's going to be bad. Like I said, on a fundamental basis, think back to what Microsoft just said and lowered guidance because of the dollar strengthening, their business overseas. It's not so good. Think about it like this. This is the best way to think about currencies. If you are a traveler, right, and you're taking US dollars from where you live, going to Europe, let's say you're going to convert that to pounds, and usually, or euros, and usually 100 US dollars would only get you like 75 euros. So that's not so good. Well, now $100 gets you close to 100 euros. So that is good for you. But what if you're someone that was in Europe and you wanted to take 100 euros and convert that into US dollars, take that conversion rate back? Well, it's not going to be so good, right? 100 euros, that's going to get you about $100, whereas 100 euros before would get you about $160, even during the high of essentially 2021. So that's how you guys can look at companies. It's not good if you do business abroad and you got to convert that back into US dollars because US dollars are strengthening so much. So there you guys have that. That's a little golden nugget you guys can always put in your little noggins so you can think back to that whenever you see currencies doing some crazy stuff. But nonetheless, that CPI report does come out tomorrow at 8:30. 8:30 in the morning. CPI for year over year, we are expecting 8.8%. The last reading we got was 8.6%. Now, the silver lining here that I mentioned in the beginning of this video is that expectations are already very high. It's not like we have low expectations heading into this report. Commodity prices have started to roll over in the month of June, so maybe that gets reflected in the CPI report. Maybe it takes until the July reading. Who exactly knows? But my personal belief is if we get a reading that is over 8.6%, markets are probably going to freak out because inflation is just simply not coming down. Right, it's getting very sticky. It's branching out into more of the service sectors, more things that are very sticky, like going to the doctors. That was one of the biggest rises we've seen over the last 2 years. Dollar for dollar was something like doctor visits. Usually when things like that go up, they don't come back down. Same thing with rents. When they go up, they don't tend to come back down. So that's what the markets are going to pay attention to. If we get anything over, call it 9%, you're going to probably, if I were to imagine, look at a 4 to 5% down move, because we are going to start potentially pricing in this 1% rate hike even more aggressively. As of right now, there is a 10% chance, it just updated, a 10% chance of getting a 1% rate hike by July 27th. CPI comes in at 9% or over 9%. Well, that's not going to be so good. It's not going to be hot at all. You got 90% chance of a 75 basis point rate hike. And just like we seen in June, when the Fed actually did end up going with a 75 basis point rate hike instead of a 50 basis point rate hike, there was only a 2-day period where the probability for a 50 basis point rate hike went from, 97% to 3%. And then we were all of a sudden pricing in a 75 basis point rate hike. It was because of the CPI report that came out, as well as some good economic data. And that's why this week will be so important considering, I should say, that 1% rate hike, because we get CPI tomorrow, right? And then Thursday, we are going to get PPI, producer price inflation. That's going to be very important. You do have some Fed speakers, all of that. But then on Friday, you're going to nail it home potentially with this retail sales month over month for June. If the economy looks like it can withstand a 1% rate hike, and that's what the markets feel like the Fed has to do, well, that's not going to be good. So if retail sales comes in good, it shows the economy is doing okay, well, you're probably going to get that 1% rate hike that does get solidified. As well as along those same lines, we do have earnings that do come out tomorrow. Some of them Wednesday pre-market. You have Delta Airlines, and then on Thursday you have JP Morgan, Morgan Stanley, TSMC, Ericsson, Conagra, Cintas, First Republic Bank. And then on Friday, you have United Health Group, Wells Fargo, Citi, Progressive, BlackRock, PNC, U.S. Bancorp, BNY Mellon, and State Street. A lot of financials that do come out, and that's going to be very important. And we will get an update to the stress test and how that did actually play out if banks are, have to put up more collateral for potentially a worst case scenario in the economy. Now, CPI as well as the retail sales will affect this. The Atlanta Federal Reserve GDP Now tracker. This is tracking the estimated reading for Q2 GDP. And depending on what that data comes in, that is going to move the needle around for this. Still expecting a negative 1.2% reading for that July 27th estimate. That's when the Q2 GDP estimate will come out. And that is one day after the Fed raises rates, July 27th. And also at the same time, we're going to be getting our trillion-dollar companies that will be reporting earnings during this time frame. So you could potentially see a lot of fear in a very short amount of time, right? Quite literally only a couple weeks away, but a lot of shit is going to be coming out that week of July 29th. And that is probably why you see not very many people are bullish for the S&P 500 around July 29th. Only about 22.64% of the total options for this expiration on the S&P 500, the most widely traded ticker in the world for options. Only 22.64% of that total option activity for July 29th is calls. 77.36% of the total open interest is put. So it looks like people are betting on some downside here towards the end of July. But for the option activity for the day, you're looking at about 2,500 orders totaling $408.73 million worth, positive order value of 87%. Now, you guys do want to pay attention to the last hour of trading today, because what we seen last time in the last hour of trading before the June CPI reading was the markets actually started to tank. So if the markets start to tank here, pretty much as we are recording this video, give it another 20 minutes or so, then that's not going to be a good sign heading into the CPI report, because that is what happened last time around. Now, this whole CPI leak is a very interesting situation, because it's literally the news release, Bureau of Labor Statistics, U.S. Department of Labor. It looks like it might be photoshopped, maybe not, who knows, but it does say right here the consumer price index for all urban consumers CPI increased 1.7% in June on a seasonally adjusted basis after rising 1.0% in May. The U.S. Bureau of Labor Statistics reported today, over the last 12 months, the all items index increased 10.2% before seasonal adjustments. So 10.2% CPI. It does seem very far-fetched. That would be a huge upset to market expectations, and you would, at that point, definitely be pricing in a 1% rate hike. You would definitely be looking forward to at least a 3.5% to 5% negative day tomorrow. So we'll see. It's getting very, very exciting out here, guys. Volatility means opportunity. Potentially, we might get those bottoms here in the markets and can start to make our way back to the upside very, very shortly in a very short amount of time, potentially during the month of August. So I think that is another silver lining there. You do have the yield curve that is still currently inverted in a pretty substantial way, negative 0.08, and we have not been this inverted since 2008, I believe. We have not been inverted this long in a very long time. You also do have Microsoft that cuts small percentage of employees as new fiscal year begins. The cuts at Microsoft amount to less than 1% of the total headcount. Microsoft's Office group took a more cautious approach to hiring in May, and this is key because Microsoft already lowered their guidance a couple of weeks ago. Maybe it was a couple months ago. It feels like it's been a while, but they lowered their guidance due to the currency exchange rates, due to the US dollar strengthening, the fact that they are actually cutting, even less than 1% of the total headcount. It's interesting. And Microsoft was also down about 2% for a vast majority of the day, down about 3% at the time of recording this video. So there's a lot of very interesting things happening on a more technical basis. I know some people like the charts, some people think the charts don't mean anything. Well, I am in the camp of, hey, these charts can tell you something, and it looks like, in my personal opinion, if we do have a good CPI report, if CPI comes in at, let's say, 8%, you need to see a big move down to actually get a bullish reaction, in my personal opinion, just because it is still high. If CPI comes in at, let's say, 8.6%, the same thing it did last month, well, people are not going to be that excited about that because it's still very high. If it comes in at 8%, 7.5%, something considerable, then people will look at that in a more bullish light. If that is the case, you could possibly expect a 3% rally to the upside. That would put the S&P close to about 395. If you do get a negative CPI and it's just very bad, let's call it 9%. Some people are expecting over 9%. Well, you could see a 3% move down in the markets tomorrow, and that would put the markets close to about 370, and that would be a pretty violent situation. That would be about a $13 move down in the S&P 500. If we did get like a 5% down move, well, that would put us close to the 2022 lows, but you would really have to see, in my personal opinion, like a 9.2, 9.5% CPI to actually get a 5% move to the downside. So all in all, I wish there was better things to say. The situation obviously does not look good. As we talked about, the dollar showing a lot of fear globally. The inflation not expected to come down in a big way, actually expected to come up. And if this leak is correct, 10% inflation is going to be something that is going to be for the record books. That is going to be a very fear-induced sell-off in the stock market. So that is pretty much going to be all for this video. That is what you guys need to know. Hit that like button and subscribe to the channel. Comment down below. Let me know your thoughts on all of this information. Other than that, it's been a pretty dry day. Nothing else that is really notable to point out. A couple of Fed speakers didn't move the markets in a big way. As you guys can tell, it's been pretty flat all day. You guys enjoy the rest of your day. Let me know your thoughts, seriously, down below in the comment section. I want to know, are you guys bullish? Are you guys bearish? What do you think is going to happen with this CPI report? That is it. You guys enjoy the rest of your day, and I will see you in the next one.